Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. We're coming into the final minutes of the close of the market this Friday, July 19th. And as you can see here, we have a very well-pronounced red candle. And while that is red, the oscillators are crossing with sell signals. Therefore, I am keeping that downside target down there at 395.69. If you had a chance to watch the midweek report, you'll know that I've kept my downside targets on all of the major market ETFs. And so that is not moving. If you look at IWM, you can see that we are also pivoting lower. The volume is fairly low. However, the oscillators are crossing. I would not be surprised at all to see the volume increasing on Monday and possibly Tuesday in that downward sell-off. So we still have gaps down below the market. So IWM downside target still in place at 208.58. And as we go to QQQ, I want to do a couple of things. First, I want to show you that candle. I extended the downside target on Wednesday to 476.81. We have already hit that, yet the Qs are already in an oversold condition. So next week, I do believe we're going to see a pivot higher. And this isn't going back into any kind of a bull market scenario, but I do believe we're going to go higher up to 483.65. Now, the reason I stopped there is because that moving average is still rolling over. And some of you have heard me say or use the football analogy where when you're drawing your target lines using that moving average, you have to throw the ball where the receiver is going to be. So you're not throwing it at the receiver as the receiver is running. You have to more or less forecast and anticipate where that moving average is going to be. And that's where the price target is right there. So again, to reiterate, that target is 483.65. Now, if I go to a minute by minute chart, you're going to see that we're still pressing the lows here in the final 2 minutes of the trading day. We're actually under 2 minutes right now. So we might see a little bit of a short covering pop in the last minute and a half here, but I do believe that we'll still see somewhat of a bounce on Monday, possibly Tuesday, but I think longer term we're going right back down. If you take a look at the monthly chart, you'll see right there, that is a shooting star like we haven't seen in a long while. That's a very bearish candle. I've been pointing out these shooting stars each and every week to our members who watch the weekly market report. So take that as a lesson, and you could forecast and do your own forecasting when you see those. You can see there was a shooting star back here. What happened after that? The market moved lower. I do believe, now this is a monthly chart, I do believe the Qs are going to more or less mimic this whole downward leg. I think we're going to see a duplication of that. And so be very careful if you're long tech. Although I think we could see a bounce, I don't think the prolonged trend is going to remain bullish. Now we're down to 3 seconds here before the market closes. There we go. The markets are officially closed. So moving on to SPY, we have the downside target has hit there as well from last week, 550.07. We had some commentary on the YouTube channel, folks congratulating us on that exact to the penny target yesterday. Today we officially hit that target. And you can see again down below, the oscillators, while they're not yet oversold, I'm going to do a two-part forecast on this one. I think we're going to go a little bit lower on Monday and Tuesday, and then I think, again, like what we saw in the Qs, I think we're going to rally up to test that moving average as resistance. So that's a two-part forecast. On the way down, you'll most likely see a drop in volume, so I will put that there just like I did back here as a reminder. And so once we get that drop in volume on the way down, that will be the signal for the buyers to start to step in and possibly cause a pivot higher and maybe a little bit of a bounce. Now, that upside target at 550.63 is, again, going to be met by resistance as that moving average rolls over like this. And like the Qs, SPY is also overbought on the monthly chart. You can see here we have another shooting star as I magnify that. See that long shadow above the candle is significant. And also the fact that month after month we're seeing this dramatic drop in volume on the way up, that generally tells us that the buyers are losing momentum. And the sellers aren't going to come in and just try to pounce the market until the buyers have finished their buying activity. You see, that's just the way the markets work. So that is another shooting star like we saw back here. And like the Qs, I think we're going to see this whole downward leg back here duplicate. So I wouldn't be surprised at all to see this 20-month moving average eventually reached and possibly act as a short-term support level. So that's SPY. Now, if I go to the VIX, you're going to see something very interesting as I go back to the daily chart here. The VIX has hit my upside target like a champ. And this was a very odd thing that happened here, and I'll get to this in a moment with the IT problem that happened overnight. In the middle of the night, early in the wee hours of the morning, you could see here that we had the outage, and I think it really messed up their data feed back there around 4:30 in the morning. And that's why we're getting that very odd shadow showing up on the daily. So I'm going to discount that and just treat this right here as more or less a spinning top or maybe even a shooting star. So I think that the VIX could pull back a little bit. Let me just back out just a little bit to get this reference for you. I think we're going to pull back on the VIX, which again is going to cause a possible bounce in the general markets. And I'm going to go down to this level. And some of you already know where I'm going with this. The reason I stopped my downside target on the VIX down there is because this resistance high, now that it's broken, will most likely act as a support. That's what we refer to as roll reversal. Go back in the description box below and look at all the links that I have to roll reversal, fan lines, Fibonacci numbers, and gap trading. These are all lessons each and every week that I put out, especially on Fridays, to help those who are just beginning to get into their journey with trading and using technical analysis as a tool. So that roll reversal is going to play a very important part for the VIX next week. So I do believe we're going to see the VIX pull back to that target of 1522. Look down below, you could see that we have a little bit of a hinge on the stochastic and a full-fledged pivot on the CCI. A hinge is when you have a little bit of a change in the angle, but a pivot is in a reverse. It looks like an inverted V. On the upside, it looks like a V when you're pivoting higher. And so I do believe that the oscillators are giving us a good indication that the VIX could pull back, hence the reason why I believe we could see a little bit of a bounce in the S&P, and that's where we're going with that. Now, I just want to do a shout out on SLV because I do periodically report on that. You could see that we have officially hit my downside target here on silver at 27.17. Now, I am going to be a buyer in this general area down here just above $23. I'm not a buyer yet because we see that increase in volume today. As I zoom in here, you see the increase in volume on the way down. And the gap down could lead us to a possible bounce where we might see an ABCD zigzag with a lower D here. That's why I'm waiting patiently with the cash burning a hole in my pocket. Now I'm out of my silver position by 25%, which means, in other words, I'm still in 75% of my position, but I have that cash ready to go to buy at the lower levels so I could help lower my cost basis and then buy more shares at the lower level. So I'm just giving you a heads up. Make sure you stay tuned to my page on X because I do put out alerts on silver and even Bitcoin. And so you'll get a good idea of how to read the charts just by following my trades over there by using hashtag AJSLVTrades. and you'll be able to find all of the previous reports I put out with the charts and all my notes. And again, it's a good lesson for you to learn how to read the charts. Now, going to the geopolitical news, I want to first tell everyone that all of my forecasts are based on my 7-point trading checklist. We make this available to all of our members, and especially to those who are trying out the service through the 15-day free trial service. Remember, I do not take any credit cards for that. There's no obligations. You don't get automatically billed at the end of the 2-week period. Remember, we don't play that game. So if you want to try this out, it's absolutely free. Sign up through StickyTrades, and then you make the decision as to whether or not you want to enroll in the service. All right, now this week, we had a lot of action, and it seems to have taken the limelight off the Fed for a while, but I just want to mention something here because I've been involved in the markets since 1982, and I forecasted the top right before the market crash in 2000. I was a year early on the call, but it definitely panned out for me and our clients at the time. But you have to understand, history is repeating itself. Every time the markets pulled back in the past, Fed Chairman Greenspan at the time would hint at rate cuts, which would in turn trigger a rally. That's exactly what we're seeing right now. We saw it happen in the late 90s. We saw it happen right before the financial crisis in 2008. We're seeing it happen now as they continue to toy and tease the market with these Fed cuts. That's a phenomenon called the Fed put. And I call it manipulation. That's what the Fed's doing. They're trying to keep the markets from collapsing, so they put that carrot out there for investors to bite on and give them a little taste. And then what happens, they keep pushing it out. I don't think we're going to see a rate cut. That's just my opinion. I could be wrong, but I don't think we're going to see it. I think inflation is still going to plow ahead, and they're not going to have any justification for doing that other than just trying to pump the markets up. Now, another thing you have to understand is that the effective federal funds rate, if you look at the history of what's happened in the past relative to the funds rate and how it correlated with market crashes, this is very, very interesting. Now, I took my biggest hit in my entire career. I was only 5 years into my career at that particular point in time in 1987, and I literally lost everything in the market crash that followed. And it was only a 3-month period, and it wiped me out, literally. In 1988, the year after that crash, I came up with the 1% rule, and I stuck to it. And I teach that to all of our members and to people in the general public. It's basically a strategy based on a mathematical formula to help you minimize the losses when, not if, when you are wrong. And since 1988 until present time, I have not had a single losing year in the market. Now, don't get me wrong, I've taken some hits on individual stocks, but at the end of each year, I've had positive dollars in my account, and I'm very proud to say that. My goal is to help you do the same thing. So you wonder why I'm talking about the big downside potential here in the markets is because I am not an alarmist. I'm more or less a financial lifeguard for people. I would not be fulfilling my own responsibilities and commitments I've made to our members to ignore that. We're seeing it all over the place. And today was a crazy day because we saw what happened overnight. CrowdStrike had a failure as they were pushing out some updates, and Microsoft is tied into us. And it caused an outage meltdown where banks, the airlines, healthcare companies had what we call the blue screen. And as a result of that, CrowdStrike opened up with a massive gap lower. Now, I'm going to spend a little time on this because this is a great example of how fan lines work. Go and check the link in the description box that more or less highlights fan lines and how to draw them. But the basic idea behind fan lines is that as the trends get more and more extreme, the angles of these trend lines continue to increase. And as they get more vertical, the markets become more overbought. So I have some rules with regard to fan lines. Once the most extreme fan line in the series of fan lines break, there's a 90% chance it's going to drop to the next fan line in the sequence. And that's exactly what's happened. Now, it tested again, broke again, came right back to the second fan line in the sequence again. Well, what's happened after that is now, as a result of the gap down today, this fan line has broken. And as I say to all of our members, this is a 90% chance when the most extreme fan line is broken, it'll go here. Once the second fan line is broken, there's an 80% chance that it will move to the next fan line in the sequence. Once this fan line, the percentages drop, that now there's a 70% chance that CrowdStrike could go lower to the next fan line in the sequence, which if you look at the chart of CrowdStrike here, you'll see exactly what I'm talking about. Now, I think we could see a little bit of a bounce in CrowdStrike, but I think it's going to come right back below this fan line, and now there's a 70% chance it could drop all the way down to these levels. That's just the way fan lines work. That's the way they're traded. And again, go back to the links and learn about how to draw your fan lines, how to trade your fan lines, and how to manage risk while using those fan lines. So that's a good little bit of information for you. Now remember, the markets or the industries that were affected by that outage were the financial services, the banks, healthcare, telecommunications, retail, e-commerce, and such, transportation and logistics, especially with the airports and the airlines. A lot of those flights were canceled because of that in the middle of the night. And so I do believe that while they might get this all back online, it's going to have some speed bumps for these industries that were affected. And I wouldn't be surprised if you have, CrowdStrike and Microsoft being brought up on lawsuits. I got word from Nod on our team that there are lawsuits being launched that could be in the billions of dollars worth of damages here. And if you look at this, I have a chart that I snapped from my charting platform that basically is the top 10 mega cap stocks in an aggregate. And so if you have a Thinkorswim platform, all you have to do is take all of these mega cap stocks here, put the ticker symbol in the ticker box, and then put a plus sign separating each one of those tickers, and you could build your own aggregate. It's more or less like you treat that like a mutual fund of the top 10 mega cap stocks. And what we're seeing here is a gap down below that moving average. And again, this is a daily chart. And now that that moving average is breached, this is what I'm forecasting for the mega caps as, like I said, that aggregate. And I put the dotted line showing what I think the moving average is going to look like. So this is going to put a lot of pressure on the tech sector for sure. And a lot of pressure on Microsoft, like I said, possibly Apple and Nvidia and the others that are related. And that could create a whole different outlook for the market overall. Be sure to follow me on X. It's very important that you do that because I put out special reports like I did this week on Bitcoin. I'll put special reports out on SLV, possibly gold, and maybe some of the other markets that often are requested. But I just want to thank you once again for liking and sharing because we are rocking and rolling here. We're building our channel thanks to you sharing it and liking it and commenting on that. So you have a great weekend, and we'll talk to you next week. So long.